right, we've got a major election this week that will determine the economic landscape moving forward for at least the next 2 years. And we want to reiterate, this is not a political show, but we are looking to make trades from any moves in the administration or any shifts in power within Congress. So what are some of the major economic issues that are up in the air for this election that could ultimately the votes would determine come tomorrow evening?
Well, for both parties, number one issue is inflation, and that's a kitchen table issue that's not going away anytime soon. Number two is energy policy in terms of the former energy independences the country enjoyed and direction that might take in the future, which I think if the Republicans do well, probably bodes very well for maybe another leg up in the energy sector, which has already done well. And I've said the other day that I think they're getting a little toppy, some of those plays, but get a Republican victory on any which way and any level, I think we can see another leg higher on energy. So it's probably worthwhile there. Materials would do well under a Republican win in either house. And of course, I think generally speaking, we would see probably better conditions for the economy, but not immediately, because I don't think if there is a Republican victory here or there, or maybe everywhere, that they're going to push against the Fed as the Democrats have to lower rates again or reduce the hikes. So that's on that side. On the Democrat side, I don't know that there's a whole lot of upside if the Dems win everything. I just don't think that they've been in power enough. They've had control of both houses. They really haven't done much. And so I'm not sure that the markets would care to see that.
Do you think that the markets, just based on the fact that the Congress has spent a lot of money over the last 2 years, we just had that massive Inflation Reduction Act. It's not bringing down inflation, but the idea of a split Congress, that effectively we would not be engaging in any new significant levels of spending or any pork level type of bills, that can help the Fed kind of tame inflation a little bit more. Is that a thesis that could potentially lead to a pivot at a later point?
Yes, that historically has been the case. When we've had divided government, things manage better. There's no push one way or the other, and the struggle creates more conversation. It doesn't get a lot done necessarily, but no harm gets done. So that's the positive, and that's sort of I think the feeling out there now, and it was espoused, I think it was maybe this morning by Morgan Stanley's Mike Wilson, who's been pretty spot on with his calls, that if we see a Republican victory in the midterms, then we're going to see a stock market rally. I'm inclined to think that he's probably correct there, because divided government, and again, if one house goes one way, one house goes the other, then we got divided government. And I think that's a possibility. We could see some sort of a temporary spike. I don't know how long it would last, but something worth playing.
Bloomberg economists have effectively stated that there's 100% probability that we're looking at a recession in the next 12 months. Does the balance of power in any way shift that perspective for you? Do you expect that we would see a recession no matter who's in charge?
No, I don't think no matter who is in charge that we're going to see anything different. But who's in charge of that is the Fed right now. And if they continue to raise rates, we will fall into a recession. And if inflation, we got a CPI number coming out this week. If it is worse than expected, then we can guarantee that I could almost want to say I guarantee, but of course nobody knows. But the Fed has stated unequivocally that they're going to fight this fight till we get inflation down to 2%. You and I both agree that's not going to happen anytime soon. That means higher rates for longer. That means pushing the economy into a hard landing recession, and that's the direction. So it's not up to Congress, it's up to the Fed at this point in terms of recession.
All right, so that's domestic policy, but right now we have a lot of tension with China, obviously tension with Russia. We try to reignite the conversation with Iran over nuclear energy. We've kind of seen a little bit of a distance with us in Saudi Arabia. We've just lost our last ally in South America in Brazil. So how does this alter things geopolitically based on whatever the balance of power is?
Well, depending how the balance of power or where the pendulum swings, I think this, and if it ends up somewhere in between, it wouldn't surprise me to see something happen between now and whomever takes their seats in Congress in January. This would be an opportunity for China, North Korea, Iran, to do something, Russia to press harder in its Ukraine campaign, while there's an interregnum between government, the future government taking its seat. So I'm a little nervous about what would happen between election and the end of the year, and some of that may be further a problem in terms of there may be some races that don't get decided quickly, and that would create, I think, an opportunity for certain actors to display some bad behavior, and that would be worrisome for the market for sure.
All right. So what sectors are you expected to be moving the most over, say, the next 48 hours? We might have a recount. We might have some close races, but it does seem that there's going to be this kind of shift toward a GOP win. So what are you looking at, over the next 2 days in trading?
Well, if there is a shift towards GOP, then I would say, energy, buy some options in some of the energy plays that I think we'll see another pop. I think materials would do well. Industrials would do well. I think defense sector would do well under a GOP win. And those are probably the areas I would concentrate. But I wouldn't make any big bets right now, because I think we're going to see a bit of an S show this midterm. And that could be problematic for the markets. They would like to see some clear decision making in terms of who's going to be in power, what they might do. We're not going to get that, and the place that the markets are at right now, they're looking for direction. I don't think they're going to find it right here.
So, do you have any specific trades that you're looking at right around the election over the next 48 hours?
If I was to make a play, I would lean towards a guess that if the Republicans win, the market will see some upside. I wouldn't play that with the Qs. I would probably play that with SPY because the NASDAQ, whether it's the 100 or the composite, have their problems, because I think tech has got a little further to go on the downside. So SPY options make pretty good sense to me. Like I was just looking at the 378, 380 options, the call options, buying that spread for 70 cents or so. I think you could get a pop up to 380 pretty easily on S&P if there's a clear-cut Republican victory. That's the only way I play it. I think it's a little too early to go into sectors right now until we see what happens. And I think there's plenty of time to pick your sectors and move into those.
No matter what happens with the election, we know that there is one trend that is going to continue in this market, and that is the zombie stocks, right, Shah? So I spent some time over the weekend, and I'm going to send you this chart. I went through Kathy Wood's entire portfolio, and there are, of the top 25 companies in her fund, 21 are unprofitable. 63 of the top 96 are unprofitable. Massive valuations, and there's lots of these communication stocks, fintech stocks, things that flew too close to the sun. And over the weekend, I was listening to a podcast among a number of venture capital experts, and they were effectively saying that a lot of these companies might need to either go private at a lower valuation than when they became public companies, or have to raise money at lower than their last round when they were private. Are you seeing this trend unfold in a similar way?
Yes, thank you. Please send me that. I look forward to reading that. Yeah, this is what we've been seeing, what we've been talking about, and how we're positioning ourselves in hyperdrive portfolio. We have put spreads on Carvana, so we're doing well there, of course. Mm-hmm. But I agree with you on Kathy Woods. She's done very well on the way up, because I think what she had created, it was a momentum mutual fund, and playing all those stocks that started to go up during the pandemic, which is really when the fund started to take off, rode that victory, not recognizing that, hey, that was a short-term play, and of course caught the momentum on the way down. I don't think, and she's doubling down on a lot of these plays, which makes zero sense to me. And as far as some of the stocks in there, yeah, we're targeting a bunch of the stocks in her portfolio because a lot of them are zombie stocks. And again, they did all well when they had momentum behind them, but when you've got no earnings, you've got no profitability, you have negative profit margin just because you were a narrative darling during the pandemic doesn't mean you're a real company. And a lot of those are going to turn upside down. They'd be pushing daisies probably within, I'd say, a year, maybe two at the most.
I have to agree with you. I saw companies like Roblox that are trading at outrageous multiples. And it's not just the fact that they're trading at outrageous multiples, it's that also that their executives are not buying their stock at either, which signals that the bottom is not in for these companies.